Hey there and welcome back. Today I'm going to share a tip on how you may be able to negotiate a much better rate and monthly payment on your next home purchase. So right here we've got a really good article that talks about seller concessions. Maybe you've heard of it, maybe you haven't, but let's take a look at what a seller concession is. So a seller concession is defined as closing costs that a seller has agreed to pay. Sometimes you can ask the seller to contribute a specific amount. Other times a seller may be willing to give you a percentage. So it really just depends on your negotiation. Now, what kind of closing costs can seller concessions cover? And here it gives us some examples of some of the fees that can be used. So you can use a seller concession to pay for property taxes. You can also use that to pay for title insurance. Loan origination fees, which would be like processing and underwriting fees that are pretty common when obtaining a mortgage. You can also cover your home inspection or your pest inspection with these kinds of concessions, and recording fees. So depending on the county that you live in, there are going to be some recording fees due to the county, and you can use concessions to cover that as well. Same goes for appraisal fees. So appraisal fees could be $500 to $700 depending on the property you're looking at buying, and those can be paid with concessions. Also attorney fees. Some states don't use title companies, they actually use attorneys in order to handle escrows. So if you happen to be in one of those states, then you may be able to cover those fees with a seller concession. But the most common at the moment reason to use a seller concession is really for points. And to specifically clarify, mortgage points, also known as discount points. You see, at the moment, we're in a rising interest rate environment, especially compared to about a year and a half, 2 years ago. Rates were much, much lower, and then you saw them come up nationwide over 7%, and then back down to the high fives, and then back up to the mid sixes, and they've just been bouncing around between the low fives and then the mid sixes. So when this happens, naturally, that same $400,000 home is gonna come with a much higher monthly payment. So what is very common right now with buyers is in making the offer, they start negotiating for a seller concession in order to generate some cash to pay discount points to the lender in order to get a discounted interest rate. And that at the moment seems to be the most popular reason to use seller concessions. Now, let's talk about who benefits from a seller concession. Well, the seller concession can help both the buyer and the seller. So for a seller offering a concession on his listing, that's going to get a lot more attention because it's going to motivate would-be buyers to look at his property, because with those concessions, those would-be buyers can get lower monthly payments. But also it benefits the buyer, right? Because if you're able to get $5,000, $10,000, and depending on the negotiation, maybe even more, you can really take advantage of this concession and bring down your interest rate quite a bit, equaling hundreds and hundreds of dollars saved per month. Now, let's talk about the advantages of a seller concession. You see, a seller concession allows you to pay less at closing, making home buying more affordable. And as a buyer, usually you're going to have to come in with your down payment and your closing costs. And if you choose to buy points to get a lower rate, then you have to pay for those. But with seller concessions, now your out-of-pocket expense comes down substantially depending on the amount of concession that you're able to get from a seller. Now, there are some disadvantages to a seller concession. Now, some sellers may see an offer asking for closing costs as a less appealing buyer. And reason being is because if you're looking at buying a home, say at $500,000, and you're asking them to give you $10,000 for your closing costs, what you're really doing is offering $490 because they're giving you $10,000 back. So in a market where there's a lot of competition and maybe not a lot of inventory, a seller concession may be a little bit less appealing to a home seller because the seller has options. Now, how to negotiate a seller concession? Well, it's important to know that different financing types allow you to have different maximum seller concessions, which we'll touch on here in a little bit. But ultimately, you do this through your real estate agent. So you find the home, you connect with your lender, come up with the numbers for the rate, payment, cash to close, and then in that calculation, we can give you a number. say it's $5,000, $7,000, $10,000, in order for you to start negotiating with your real estate agent's help and asking when you submit the offer. Now, like I mentioned, there are limits to seller concessions. So depending on the financing type that you get, there are some limitations which we'll look at here right now. So let's start with conventional loans. So anybody getting a conventional loan, if you are giving a down payment of less than 10% of the sales price, then you're going to be limited to a 3% seller concession, which is still quite a bit of cash. And this is, of course, assuming a primary residence. Now, one unique thing with conventional financing is the moment that you give 10 to 25% down, then now you can actually negotiate up to 6% seller concessions. Now, if you give more than 25% down, then now you can negotiate even further and maybe get up to 9%. However, 9% is pretty dang ambitious, but if the home has been sitting there for quite a bit and has had no activity, and you're giving, 10% down, then maybe you could try the max. And this is where your agent becomes really, really important, because they'll be able to communicate with the listing agent, find out what kind of activity that property is seeing to determine whether a concession is possible. Now, for our friends that are going with FHA financing, FHA, regardless of the down payment you choose to give, the minimum is 3.5% for FHA loans. But regardless whether you give 3.5%, 5%, 10% down, FHA allows you to negotiate up to 6% for closing costs, which is quite a bit of cash. This actually, I've had this year 2 people get 6% in concessions, which is pretty rare. You don't see 6% too often. You might see 2, 3, maybe 4%, but 6% is rare air, but it has happened, and that really opens up the possibilities, because now you can use a portion of that to buy down your interest rate, get cheaper payments, and then use the balance of that to pay for your closing costs. So that way you only have to come in with the 3.5% down payment that FHA requires. Now, our friends that are getting USDA loans. So USDA loans are for rural areas. So I live in the state of Nevada, so our friends in maybe Fernley, Dayton, Yerington, those surrounding areas, a USDA loan will allow you to finance up to 100% of the sales price, which is pretty awesome, as long as you meet the USDA income requirements and debt ratio requirements. But if you are getting a USDA loan, you are able to negotiate up to 6% seller credit for closing costs, just like FHA. Now, there is another 100% financing loan out there, which is the most common, which is VA financing. But with VA financing, a seller can contribute up to 4% in concessions in order to help that veteran achieve a much lower monthly payment. So those are the maximum amounts, and it's really important that you know what is allowed. This way, in your negotiation, you and your agent can come up with the right offer, the right strategy in order to help you win that home. Now, some quick frequently asked questions. What can I use seller concessions for? Well, like I mentioned, it can be used towards closing costs. At the moment, most people are using it towards rate buy downs in order to obtain cheaper monthly payments. Are seller concessions common? Really depends on your market and depends on how much inventory there is. So what I can say here in our market in Nevada and Washoe County, we are still seeing some concessions happening, which is great. Can a seller refuse to contribute towards my closing costs? The honest answer is yes. A seller is never obligated to pay for closing costs, especially if you're in a situation where there's multiple offers. If there's a lot of people bidding on the same home, it's highly unlikely that a seller is going to contribute. Now, are seller concessions paid out of pocket? Kind of. It's really coming out of the proceeds from the sale of the home. So I gave an example earlier. If you offered $500,000, asked for a $10,000 credit for closing costs, then that $10,000 is really coming out of the seller's pocket from their proceeds of the sale. Now, are seller concessions taxable? Seller concessions are considered to be sales expenses and therefore tax deductible. So you get that benefit as well. Now, is it better to ask a seller for concessions or a lower sales price? So this has become the big debate at the moment. Do I offer $10,000, $20,000 below the asking, or do I just ask for the $10,000, $20,000 closing cost credit in order to get a lower payment? And it really is case by case. What I can tell you we'll do is we will do the math on both. We'll give you the numbers on you making the offer $20,000 or $10,000 under the asking price at market rate, and then we'll compare it to you offering the market price and requesting the $10,000, $20,000 to show you how much the buy down can get you. Most people at the moment tend to lean with getting the seller credit because it tends to give you a bigger impact on your monthly payment. So there you have it. If you are in the home buying process and you have not talked about your lender or your real estate agent about seller concessions, it may be a conversation you need to be having, because if you don't try, you won't know. So there you have it. I hope you found today's information valuable. If you did, please drop us a comment, give us a thumbs up, and don't forget to subscribe. See you on the next one.